Hi, we are Conjuring.
We are the future box manufacturers.
Our motto is box for everyone. Let's enjoy our video.
Hello, good morning. I am the CEO of Conjuring. First of all, I would like to declare that we are not the horror productions companies, but we are the box manufacturing companies. First of all, I would like to give some introductions of background to our companies. Conjuring have a strong relation stand in the manufacturing company because we have a strong bond relationship to several local packaging companies such as Post Laju, CityLinks, to ensure the high demand of requests for our final goods products. And we expected that this will lead us up to 5.2 million revenues by the following year ends, and we estimate this revenue keeps going from years by years. Okay, to get a closest view of Conjuring we propose our value chain. We can observe that the main process we are doing is manufacturing a box and sells our box through the marketing strategies as listed in the value chain. The second activities we are focusing is aimed to support the primary activities to that. So you can see that there are several overhead costs that used to make sure our main activities can be executed flexibly. Okay. How our company is going to operate to run out is very simple. I would like to propose the operational flows to you all. This is okay. As we can see, the operational flow we are doing is as simple as shown in here. Okay. Finally, I would like to share about the Conjuring how we're going to keep in touch with customer. By end of the day, we just always answer the requests from the customers by giving the good and best quality of carton box. Thank you.
Hi, I'm Ezri. I will explain the budgeting plan for Conjuring. We set our target for 2017 for sales are 5.2 million. For the quarter 1, we set our target to sell for 405,000. For quarter 2, we produce less unit assumptions. In that quarter, we have less order from our customers. As you can see, the increasing from quarter 3 and 4 because of the increasing number of customers ordering. The total sale for the year are 5.2 million. In the direct labor, we calculate it by units per box produced. We calculate machine operator and other labor hours that include engineers and forklift operator. The number vary by each other because the number of hours of the direct labor hours and other labor hours work are based on their work they need to do on hands. We have calculated that the total direct labor is 512,628.75. In the direct material, we have domestic meals, other chemicals and waxes to create a box. So, the total for manufacturing for the total year are 1387723.60 for direct material. For the overhead production, we list down utilities that include electric, water and internet and telephone. In rental, we include forklift, truck and production machine. Maintenance and security, we include the machine maintenance and security with CCTV. Indirect material are cornstarch glue and indirect labor consists of director of manufacturing operation, production supervisor, purchasing staff, material handling staff and quality control staff. The total up for this overhead are 478,500. So, this budget is important because it will provide structure, predicting cash flow, allocate resources, model scenarios, and measure the performance to run the business. So, I will pass it to my colleague to explain more.
Annyeong, I'm Misha. I'll be explaining about least square linear regression method. Based on the analysis, a standard equation has been formed as y equal to 5719.638 plus 20.02584x. This equation can be defined as the monthly cost is estimated with 20.028584 times of machine operation hours with 5719.638 ringgit as the fixed cost. The fixed cost in contingency number hard refer to the electrical cost for others indirect electrical utilities from our manufacturing process. The fixed electrical cost means that no matter what happens in production and manufacturing process, either it is progressing fluently or totally stopping, 5719.64 ringgit must be made payable monthly in order to cover up for others indirect electrical utilities expenses. Based on the equation, a new cost of estimation has been reconstructed through this method. It shows that up to 96.50% of confident interval that the cost of electrical usage for 6360 hours of machine operation hours is needed to produce 1741500 units of boxes. It will cost us up to minimum of 1883 to 6.84 ringgit to 203673.16 ringgit based on this method. Through this analysis method, we can use the data set for the following decision making, such as first is to allocate next year electrical budget, and the second one is to compare with others manufacturing company cost allocation and profit, and the third one is to attract more investors. As we are able to propose a clear-cut budget allocation plan and marketing analysis, our investor will be convinced more easily that might lead to get more funding. Next, I'll be explaining about contribution margin costing. To get contribution margin, we need to deduct variable cost from the sales. Our contribution margin is 2318810 ringgit. To get the operating income from the contribution margin, we need to deduct the fixed cost. Our operating income is 197610 ringgit. From the contribution margin, we need to get the contribution margin per unit. This is the contribution margin per unit. The contribution margin per unit indicates that after the variable expenses of 1 ringgit 66 per unit are covered, each box produced will provide or contribute 1 ringgit 34 cents toward the contingency neighborhood fee expenses, which is 342500 ringgit. After the fixed cost expenses has been covered, the company's profit will increase by 1 ringgit 34 cents per box produced. From the contribution margin, we can get the break-even points in unit. Our break-even points in unit is 255598 unit boxes. This computes that 255598 boxes must be sold in order for contingency number hard to generate enough revenues to cover all of its expenses. When translated into sales ringgit, contingency number hard needs to achieve 766794 ringgit in sales in order to have zero loss or zero profit. The contribution margin income statement is a very useful tool for us in planning and decision making internally. The contribution margin income statement is a cost behavior statement rather than separating product cost from period cost like the traditional income statement. This statement separate variable cost from fixed cost. Thank you.
Hi, I'm Anis. Okay, I will explain the cost volume profit. Cost volume profit analysis requires that all the company's costs, including manufacturing, selling, and administrative costs, be identified as variable or fixed costs. This is the manufacturing boxes for fixed cost is fixed manufacturing and fixed selling and administrative expenses. So for the variable cost is direct material, direct labor, variable manufacturing overhead, and variable selling and administrative expenses. Okay, this is the summary of CVP analysis. For fixed costs, which is fixed manufacturing and fixed selling and administrative expenses. For variable cost is direct material, direct labor, variable manufacturing overhead, and variable selling and administrative expenses. So for the total fixed cost is 342,500 ringgit, and for variable cost is 2.3 million. Okay, now for the decision making, we have two scenarios that we need to decide either make or buy the boxes, and add or drop product line for medium boxes. Okay, first, before we start our business, we have to decide to sell the large boxes, but after that, we have to make a decision to produce the box or we just buy the box from the supplier. And outside supplier has offered to produce and sell the large boxes at a cost of 1.40 per unit. Okay, from the table shows the make or buy decision. This table consists of relevant costs, which purchase price, direct material, direct labor, and variable overhead. Apart from that, this table we do not put fixed factory overhead because that cost is not relevant and it will be there no matter decision we make. So for make the large boxes, it will cost 1.22 per unit, and if we buy the large boxes, it will be 1.40 per unit. Okay, so from that, our company can save 313,470 ringgit, which is 2.1 million minus with 2.4 million if we produce the box rather than buy it from supplier. So we, as a Conjuring Sdn Bhd, will choose to produce the large boxes because the outsourcing total cost is higher than we produce the boxes by ourselves. Okay, next, for add or drop product line for medium boxes, we can see from the table, the operating profit for large boxes is 2.5 million ringgit, with higher to compare with medium box, which is 45800 ringgit. Medium box still gives a profit, but as we are still a new company and the demand for large boxes are much higher due to contract have been made from our clients, we need to drop medium boxes. This is because we can focus on one thing first and learn what we can do to maximize our profit by adding the product line in the future. Next, my friend will continue with it.
Hi again, I'm going to talk about balance scorecard. So our balance scorecard have 4 perspectives: financial perspective, customer perspective, innovation and learning perspective, and internal perspective. So, for the financial perspective, financial performance measure indicate whether the company's strategy, implementation and execution are contributing to bottom line improvement. Same with Conjuring Sdn Bhd, the financial goals have to do with profitability and growth. Survival was measured by cash flow, success by quarterly sales growth and operating income by division. Financial performance is the result of operational action, and financial success should be the logical consequences of doing the fundamentals well. So, the next is customer perspective. Carry with the mission statement of Box for Everyone, it shows that Conjuring Sdn Bhd is always giving the best product value to their customers. It is our priority to give customer satisfaction and customer profitability towards our process. Therefore, the balance scorecard will translate their general mission statement on customer service into specific measures that reflect the factors that really matter to customers. Customers' concerns tend to fall into 4 categories, which is time, quality, service and cost. Lead time measures the time required for the company to meet its customers' needs. For example, lead time can be measured from the time the company receives an order to the time it actually delivers the product to the customer. Innovation and learning perspective. Conjuring Sdn Bhd focuses on the ability to innovate, improve and learn that ties directly to the company's value. That is only through the ability to produce less consumable product which create more value for customers and improve operating efficiency that continually increase revenues. In addition to measures on product and process innovation, Conjuring Sdn Bhd oversees specific improvement goals for their existing processes. For internal perspective, the internal measures the balance scorecard that affect cycle time, quality, employee skills and productivity. For example, Conjuring Sdn Bhd should attempt to identify and measure their company's core competency and the critical technologies needed to ensure in gaining in the market leadership. So thank you for watching our video and hopefully you enjoy.